let's start saying that if you only look at price, you're trading half blind, because volume is the lie detector of the market. And once you know how to read it, you'll stop getting faked out by moves that look big but actually mean nothing. It's not a complicated indicator. You can start using it in the next 5 minutes today on any chart. So the thing you need to remember at all time is this. The price, so what I see the candlestick doing, tells me what happened, what's happening. And the volume will tell me if I should believe the move or not. So always remember these two sentences. So you need to think of volume like the number of people voting on a price move. So a stock can jump 5% in a day, but barely anyone traded it. That vote doesn't mean much. So if it's just a handful of people deciding the price. But if the same 5% move happens on volume that's double or triple the average, now you got real participation. Right? So the move has conviction behind it. The volume will actually tell me, should I trust this move or not? Now, this is the rule I trade by. A big price move, like this example here, this big green candle, without a big volume or a volume above average, is a move that I don't trust yet. So in this example, you see you have big green candle, followed by another one that broke previous resistance on above average volume. This is a move that I trust. Yes, it can pull back, it can retrace, but I trust more the move that will continue to the upside. The same goes for the downside. If I see a move to the downside with a big candle and above average volume, I trust the move to continue to the downside more than a big red candle with low volume, because there's not much participation. So it's less likely that the move to the downside will continue. Now, we don't know for how long the move to the downside will continue, and it's not going to be in a straight line, but I'm more confident in my choices because you need to put the odds in your favor. So if I see a big candle, I want big volume behind it. Otherwise means something's wrong or something is happening that we don't know yet. We don't know what it is, but we need to be careful. Instead of putting on a trade immediately, just looking at the price, we need a confirmation of the volume. So there's another very important thing, and this is the part that most people miss completely. And it's actually the highest probability setup in this whole conversation. And I'll show you an example. Is a compression, volatility compression with volume drying up, followed by a big volume expansion, volatility expansion with a big move. So before a big move happens, the chart usually goes quiet first. So you'll see the candles getting smaller and smaller, like you can see here. It's very small candle, tight candles, and you will see the volume drying up. This is a perfect example. So when the volume dries up and you see this very tight, small candle, something is happening, because fewer shares are changing hands every day. But that's not just a boring price action. This is accumulation. So someone is building the position quietly without pushing the price around, because big buyers don't want to announce themselves. It's like a spring getting compressed. The tighter it coils, like here, small range, shrinking volume, the more energy gets stored for the eventual release. And when that release comes, you want to see it coming with big volume. Like this example, you see the candles are tight, little range, tight base, volume drying up, and you see a break. This break is followed by big volume spike, volume above average. That's what you want to see. I trust this move because everything I need to see happen. And you can see as a result, we have a big move to the upside. This could be a great trade. Just because you read how the price and volume are behaving, you can have an idea of what the possible next move is going to be. You need that volume confirmation. So that volume confirmation is really important. If, on the other hand, we had this compression, then we had a break to the upside with very low volume, that's not real conviction. There's not real money behind this move, so I don't trust it. Maybe it's going to compress again and expand with higher volume. I don't know, but I need to wait. That's the reason why it's better to wait for this kind of confirmation, because it will save you from a lot of pain and losing money. So next time you're looking at a chart, ask 3 questions. Is this move backed by volume or is it quiet? Has the stock been compressing with smaller candles, drying up in volume before a move? And does the breakout candle itself comes with a volume spike? If you get 3 yeses, that's a move with real backing. And it's a big candle with nobody trading it should show you low volume. And so you shouldn't trust it. Okay. So this is just a small piece on how I read chart before I place a trade. Price and volume together are so powerful. And if you learn how to use it, really, you can have a very good shot at becoming a profitable trader. Never price in isolation, always together with volume. If you want to see how I build this into a full trade plan, drop a comment and I will post a trade that shows you exactly how to behave when we see these conditions of price and volume that are met. Let me know if this was useful down in the comments. If you want to subscribe to my channel or follow me, that would be a great help. See you next time.